Trading Nut, Episode 4.
You take what you've learned and then you sort of modify it and adapt it to fit yourself, your personality, and your psychology, so that you can then go forward with that thing and then have success and be prosperous in it in your own life.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another episode of the Trading Nut Podcast. Hope you're enjoying these so far. If you haven't checked out the show notes yet, do jump on there and check them out. They're absolutely fantastic. So they're a step ahead of where I was with the 52 Traders podcast. We've got nice visuals that you can share on your social media, quotes from the show. We've got video, a full video of the show as well, so you can hear this full interview on YouTube. Subscribe to the YouTube channel if that's the sort of thing you're into, instead of listening to it on the podcast. If you're into the podcast, which I do recommend, great for like driving, running, walking, doing something else, and you want to have some stuff on in the background, so you want to be educating yourself, entertaining yourself whilst you're doing that stuff, as you may be doing at the moment while you're listening to me talk here, then jump onto iTunes, subscribe to the podcast there, or Android. There's plenty of podcast apps. In actual fact, go to tradingnut.com and the buttons are there, but do it on your mobile phone and you'll see there on the homepage the buttons to subscribe to those various podcast apps and get Trading Nut on your phone. So I listen to podcasts all the time, and it's a fantastic way to, I suppose, get really good education in your earbuds whilst you're doing other stuff. So it really maximizes your time. Whilst you're there, do please leave a review of the show. It really does help. And today, who have we got? So today we've got Shawn on the show. Now, I don't know if you guys have heard of him or not, but you've probably heard of some of the guys that he's been either taught by or knows through his trading journey. So they've been on the show. They were actually on the 52 Traders podcast back in the day. So you're going to hear about that in a second when you listen to the interview. He does drop a lot of value in this interview. We talk about Elliott Wave 3 push theory, market maker method, divergence, how he manages to get a high winning ratio or winning rate of 70% plus, and this is mainly around the Forex pairs, okay? So he trades currencies. So if you're a currency trader, this is going to be a really great episode for you. But even if you're not, there's still a lot of golden nuggets in here. And at the end, he gives us a full trading strategy as well that you guys can have a look at on your charts and try out at home. So, right, before we get into the show, we're coming up to the first full month of Trading Nut being live, which means the launch offer of the Trading Nut Gold membership, where you get one new robot a month. It's like a monthly robot club. One new robot a month is about to expire. So if you do want to jump on board and get one new trading robot a month, and look, these are coming with optimization results, thousands of them, settings that you can actually just load up there and then that historically have been profitable in backtests across a number of currency pairs, indices, you name it, they're in there. There's going to be fully automated, there's going to be semi-automated robots. So these are things that you can add to your trading arsenal. You can actually suggest what you want, okay? So if you've got a strategy in mind, or if you've got a tool in mind that you want, then let us know, and what we'll do is we'll create that robot for you, at least let you know if it works or not. If it doesn't work, then we'll let you know. If it does, then it'll get included in the membership, and you get to get that robot straight away. You don't have to wait, okay? So if that sounds good to you, then what you need to do is jump onto tradingnut.com and you'll find information about the gold membership there, the join here button, or there's other buttons on the site that you'll find it. Now, so we've got a few days left, ends at the end of this month. The launch offer is only $1 to get in, so jump over there, check it out. If you're listening to this after that date. So the date, it will be 1st of October. Then check it out anyway, because who knows what it's going to be. Okay? All right, guys, let's get on with today's show and hear from Nick Shawn. All right, folks, so we've got Nick Shawn here on the show today. Now, Nick's been recommended by a listener out there. So, Gloria, thanks for flicking through the details and allowing me to hunt him down pretty quickly to get this interview underway. So, Nick, how's things over there in Fort Worth, Texas?
It's a pretty bright, sunny day today, man. It's really hot, though. It's just really humid over here in the States right now, here in Texas. But it's been a pretty good day, man.
Yeah, because you guys aren't being affected by these fires that are over there at the moment?
Oh, no, I'm not aware of any fires right now, no.
No, okay. I mean, I've been hearing, all we see on the news at the moment is wildfires in California, and it's, you know, just, and then in Europe as well, it's all over the place. So I don't know what's happening with the planet, but fingers crossed on that one. Now, so we got you on the show here. Recommended by Gloria, who obviously has been following you and thought it was a good idea to get you on. I've had a look through your Facebook feed and some interesting stuff on there. Do you want to start off before we sort of get into like your full story? But do you want to start off by telling us how you found yourself where you are now? Where'd you start? What's your life story look like? What do you currently do? All the way up to the sort of current point in time. What does that look like?
Oh, man, it's quite a story, but I'll keep it as brief as I can. Long story short, man, I graduated high school. I've typically always had good grades my whole life, straight A student, did really well, and then I went to college. I didn't know what I wanted to do. I was in engineering. I then went into nursing, and then I ended up finishing up with criminal justice, and I wanted to be a police officer. I just wanted like that whole service to community type thing. And I knew that whatever I chose to do with my life, I wanted to help people out. And so that's what I wanted to do. I ended up kind of stepping back from it all and putting it into perspective because I wanted my lifestyle to reflect a lot of freedom. That was my one thing that I really wanted. And having that kind of lifestyle, being a police officer and working like most jobs in general, you typically don't get a lot of freedom. So I wanted freedom financially, freedom with my time, being able to wake up, do whatever I wanted. So I started looking into a couple different things, entrepreneurial per se. And a couple things I found were network marketing, selling stuff online through e-commerce, drop shipping, Amazon, eBay. And then I found Forex. Initially it was stocks, and I was initially getting into penny stocks. I was just trading them through my Robinhood app just to try to learn, because I thought the idea was cool that you could just look at a chart, make a decision as to where you thought price would go, and then from that decision you could make $10, you can make 100, you can make 1,000, you can make 1,000,000. Of course, depending on your account size and things like that. But I thought that was so cool, and I thought that if I could learn to trade and do something like trading, it would create a substantial amount of freedom for me, because I could look at charts maybe for like an hour or two a day, and then I could go about the rest of the day however I wanted to. So that's really what stood out the most to me too about trading. So I was introduced to Forex about a little over 3 years ago, maybe 3.5 years ago. And then I kind of met a few people, kind of learned the ropes. It took me about a year to a year and a half to really start making enough money that would replace my income. I was able to quit my job, so not have to rely on a job for income. And I really started kind of finding myself that freedom now. So, flash forward to here, 3.5 years later after I found Forex specifically, and man, I'm loving life. So that's kind of where I'm at now. But yeah, freedom was that main thing, man.
And so just tracking back a little bit, so penny stocks to Forex, I mean, how did that transition happen?
So whenever I was learning penny stocks, one of my friends on Facebook, who was in a network marketing company that's Forex related, he reached out to me. He said, "Hey man, I see you trade penny stocks. Have you ever thought about trading Forex?" And, oddly enough, I'd never heard of Forex before. I didn't know what it was. I thought it was like some sort of sales thing. But he's like, no, it's foreign exchange, it's currencies, it's trading. And so I looked into it more and ended up, kind of like partnering with him in that company. And I was in that company, that network marketing company, Forex, but they were very marketing related, maybe not so trading oriented as I'd like. And so what ended up happening is I left that company after about 2 months, and then I just started learning to trade, and I spent like a little over a year like banging my head into the wall to learn Forex. But yeah, that's kind of how the transition switched, man. I found it. I like it because it's more liquid in my opinion than penny stocks. and it's just a lot more volatile, and you can use leveraged accounts. So yeah, that's what attracted me to it.
And so I suppose for the listeners' benefit, so we just had a quick chat before the show, and I didn't realise this when I was booking the interview, but I think it just adds a little bit of spice to it, if anything. So Nick knows some other guests of the show quite well, and he's referencing Derek van der Linde and Avdo, who've both been on the show before, and the fact that that was the network marketing company you worked for. So I'm guessing they worked for I think Derek worked for the same company, and Avdo was a student in Derek's first venture. Is that right?
I think so, yeah. I believe so, yeah.
And so you're still in contact with Avdo now, and you're still in contact with Derek, and I saw them on your Facebook, so I wondered if there was some sort of connection there, or if it was just a coincidence that they were friends with you, because you have got quite a few friends, more than me, on your Facebook profile, so it could have been anything. So that's interesting. So you sort of come through that school of I suppose the same origins. Now, I mean, on that, what do you think? Sort of, I mean, you three guys are doing really well from what I can see, and I sort of wonder if there was something. I mean, was there something in that initial education, or was it something else around just who you are that you think sort of got you to the tipping point and beyond?
Yeah, I mean, so there's a couple things, man, but here's how I think it works, and I kind of derived this from my own experience, as well as Walter Peters, the guy who made like Naked Forex and trading with just pure price action. But here's what he says, and here's what I really agree with, is whenever you learn something, this is with anything in life, not just with Forex, but you kind of learn something from maybe a few mentors, or from education, maybe formal education, maybe self-education. And once you learn something, you take what you've learned and then you sort of modify it and adapt it to fit yourself, your personality, and your psychology, so that you can then go forward with that thing and then have success and be prosperous in it in your own life. But yeah, so as far as I learned from Derek. I was in Derek's program before, and then with Avdo, we've been friends for the past few years, and I've sort of followed him, he sort of followed me, and we keep in contact regularly. And I've noticed the same things, whenever Derek first started, his trading style is somewhat different now than it was when he initially started. And then for Avdo, it's crazy, like his trading style now is just almost entirely different from when he first started. But each of us did the same thing. That's what all three of us have in common, is we all took an initial amount of education and then sort of modified it to fit us, and we adapted that to where it works for us, if that makes sense. Does that make sense?
Yeah, it makes perfect sense. And I think that's sort of where I ended up as well, in terms of my thinking around how I should approach this. And for so many years it was like, somebody's got the answer, just give it to me, because obviously you've done it, you've been successful. How much can I pay for you to give me the answer, and tell me where the blockages in the pipe and where I need to tap on it, and without realizing that it was an actual fact. You didn't need to. Well, you could be given the answer, but it's not really going to work for you in this instance. You need to come up with something that works for your personality, your mindset, your lifestyle, and all that sort of stuff. So yeah, it makes perfect sense, and there's a nice way to put it in terms of the whole sort of learn, adapt, and then you're going to find your own success. And so I think anyone out there who's looking for that silver bullet from a mentor and hoping that they're going to just like copy and paste whatever they're doing, then I think you just need to rethink that a little bit and go, let me take the education and see how I can adapt it to myself. And I had a recent interview 2 days ago where it was this exact same thing. So same sort of premise around all this knowledge, and then taking it and adapting it to something that works for them. So do you want to give us some insight into your trading now? So we want to get like the real stats around what you're doing. Do you want to start off maybe first of all by giving us your trading style or strategy? I mean, how would you sort of pigeonhole it?
Yeah, so I mean, if I'm just giving a real straightforward, direct answer, so my trading style typically is a combination of three things, essentially, is what it boils down to, which are the first thing being technical analysis on higher time frames. For me, I like H4 and daily charts. And then I also like Elliott waves, or like the three push theory, or like the market maker method, how it's like three levels, the three little pulses before price makes a reversal. So whatever you call it, whether you call it market maker theory or Elliott waves or the three pulses or whatever, I use that in my analysis. And then also divergence to spot the reversals. So that's my trading style, just combine those three things. My strategy just falls in line with that. I take trades throughout that cycle. Time frames is just the H4 and daily. My average trade duration, I'd say, takes anywhere between maybe a couple of days to sometimes a week or two, sometimes 3 weeks. I've been in a gold trade for the past 3 weeks that I'm currently in right now, so it all depends with those higher time frames. As far as my win rate, I don't know, man. It's anywhere between 7 to 8 out of 10 trades I'd say I win. And if I lose, it's usually, roughly can be recouped within a trade or two. Because you got to have those good risk to reward ratios when you're trading, especially if you're trading higher time frames, because you can get into drawdown, 50 to 100 pips sometimes. So you want to have that good risk to reward ratio. As far as like account growth, maybe if we're doing like our yearly and monthly return, and I go for anywhere between 10 to 50% monthly, and that is a very wide range. But whenever you're trading, like nothing is guaranteed. The only thing that's guaranteed in trading, they say, is that you're going to take losses, and like I fully agree with that. So performance can't be guaranteed, but I go for anywhere between 10 and 50%. If I can grow my account just 10% the entire month and do that consistently for a year before compounding, that's 120% growth. That is phenomenal. That is 100% phenomenal. So yearly growth be anywhere from 100% to maybe 500%. Let's see if I can think of anything else. The currency pairs that I just trade all the Forex pairs. I trade most of them, but my favorite ones are 5 volatile pairs. 3 of them are JPY pairs, and then Euro USD and GBP USD. My average number of active trades, I don't really have an average number with that. If I see a good setup, I'll take a trade. I can be in 2 trades at any given time, or I can be in 20. If I'm getting into drawdowns, it's typically not anything that's big percentage-wise on the account, but sometimes you can have on a higher time frame a 100 pip drawdown, but as long as you're controlling risk, it'll typically be a very small percent of your account. So yeah, that's how I'd sort of give a little bit of insight into my trading.
And so what? I mean, I suppose what would be a typical win if you're sort of, you might go into 100 pips drawdown. What would be an average win from a pip point of view?
From a pip point of view, anywhere from 100 to 300 pips, maybe 100 to 250, but it all depends. There's very volatile pairs that can move, 400 pips in a day, like the ZAR and like the TRY, the Turkish lira, and there's also pairs that are like USD CHF, which can take like weeks to move a couple hundred pips. So yeah, it all depends, man.
And so you said it's a basket of those currency pairs. What about? You mentioned gold. I mean, do you trade any other commodities or indices?
Typically, no. And I've never even traded silver before as well. I don't know. I've typically just traded gold and the Forex pairs.
Okay, cool. And that's probably one of the best insights into trading that we've had on the show recently. So thanks for giving us all those stats. Now, what does your typical day look like, given that that's the way that you're trading?
Yeah, so a typical day involves me rolling out of bed whenever I feel like it, and that's anywhere from 7, 8, 9 a.m. I try to get a head start on the day early, but I never set any alarms or anything. I just wake up when I'm done sleeping. And then I usually go downstairs to the first floor of my building. I live in the city, so there's plenty of businesses around. There's like a bunch of high-rises here in downtown Fort Worth. And so on the first floor of my building, I'm on the 4th. On the first floor, there's a very nice coffee shop. So I go in there every single morning. I probably spend hundreds of dollars there every month just on coffee alone. And sometimes I'll go in there 2 or 3 times a day. But I get coffee, and then I go on a little quick walk around downtown, or maybe to like one of the various parks they have in the city, and I just get my mind right. I make sure I'm peaceful. I make sure nothing's bothering me. And after I finish my coffee, I'll typically come back into my room up here on the 4th floor, and I'll get on the charts for a bit, spend maybe an hour or 2 on charts, getting with clients, and then after that, I'll kind of just space out and do whatever I want the rest of the day. I like to spend a lot of time with family.
And so when you're doing the chart time, that's when you're either placing pending orders, or do you place trades within that time period? How does that work?
So typically, oftentimes, man, a trading decision for me typically takes less than a minute. And the reason I say that is after I've marked up significant levels on my chart, and identified maybe certain patterns I like, such as, Elliott waves, and marked up some levels. As long as I've done that, on the H4 charts and on the daily charts, the charts don't really change that much. So my trading typically just involves me looking at the charts that I already have set up. I use TradingView, that platform, for me because they store your charts and it's real detailed and very easy to see. And I just typically click through all the currency pairs and all the charts are marked up, and I just see where price has gone. And then I manage my open trades based on price action. If I think a target's still very reasonably going to be hit, stay in the trade. If I see price come to a certain level that I was looking for price to come to, if I'm looking for things like rejection at that level, I'll kind of do my analysis then. But typically, man, I'll spend less than a minute on each currency pair. And then sometimes I'll set pending orders if I see that it's fit. And sometimes I'll kind of wait and I'll just sit it out to see what price is going to do when it gets to a certain level. And then I'll modify trades. I'll place trades if I need to. But it's typically just going kind of like following up with all the trades and all the currency pairs. That's what I mainly do during that time period.
And so how did you find yourself moving from the lower time frames to the higher time frames? I'm assuming that that's the route you took. I had a quick look at your Facebook page, and I'm not too sure if it was your posting of your own accounts or clients' accounts on there, and I saw a couple of 1 minute charts and stuff. I mean, do you want to walk me through, what's the question here I'm trying to ask? The question is, did you start off in lower time frames and move to higher time frames?
Yes, that's 100% correct. So when I initially learned trading, which I learned a lot of my initial stuff from a few basic things I found on YouTube and stuff like that. And I was in Derek's course too, and so we learned a lot about divergence there. And so typically what I'd be doing is on the 1 or 5 minute chart, I would wait for divergence and take a trade. And I found myself having to sit at charts for a long time in order to be able to take enough trades. And sometimes I wouldn't even see any good trades throughout a trading day. And so the 1 minute and 5 minute scalping, that worked very well for me for a long time, for a little over a year, in fact. And that worked really well for me because I was able to just wait and be patient for setups. And if I didn't see any setups that I liked, then I wouldn't take any trades. And so that prevented me from incurring unreasonable losses. But the reason I got away from it, and I think the reason a lot of people get away from lower time frame scalping, is because number one, the risk to reward ratios are often very, very, very difficult to control just because there's so much manipulation on the lower time frames, especially for volatile pairs like JPY pairs from my experience. GBP JPY is one of the most volatile pairs, and there's plenty of others too, but for some on the minute 1, minute 5, those volatile pairs can get you thrown out on even a really good trade if you're trying to use just a set 1-to-1 risk reward, or even worse, like a 1-to-2 risk reward. That's really hard to get on the minute 1, minute 5. I mean, you have to snipe your entries, and then also you have to worry about managing your trade if it goes into drawdown. So that was my first reason for getting away, is just it's the risk to reward ratios. And the second thing is because I like the idea behind swing trading and higher time frames, because while on the minute 1 the charts are very literally changing every minute, minute to minute the charts are something else. The candles are getting repainted, prices going up and down, and stuff like that. So you're forced to make decisions on a short time period. And for me, even though that worked very well for a long time because I'd sort of acclimated myself to the stress levels that come from lower time frame trading, and it worked really well, but I found myself more peaceful looking at a chart on a higher time frame, getting the big picture, and then waiting for what I know will work out most of the time, whether that's 60, 70, 80% of the time, whatever it is. If I know that if I wait for a pattern that I know works to happen, then I can take that trade, I can control the risk with that trade, manage it if it goes into drawdown, cut it with a small loss or whatever, and then if it goes into profit, then it's a substantial profit. I mean, 1, 2, 3 times the amount of profit than if you were to lose the trade. So for instance, one trade can make up for 2 bad trades. One good trade can make up for even 3 bad trades sometimes. So those were the 2 reasons. The one, just a risk to reward, and number 2 was, for me, it's just more peaceful trading on the higher time frames, and it's less work. You don't spend as much time looking at the charts after you've marked them up for the first time. You just kind of follow up. Does that make sense?
Yeah, it makes perfect sense. So I'm just going to change the subject here completely. I mean, what's your view on cryptocurrency trading? I mean, you obviously don't trade them, but have you thought about it? Have you got clients that do? What's your take on it?
I've got, man, I used to trade quote unquote trade. I've never traded cryptocurrency on margin. I've tested it on a demo account before, but to me, I don't know, it's just so volatile. What I used to do is just buy and hold cryptocurrency on Coinbase, and then I made some money and then I lost some money. I think I came out on top like $11,000 last year. And I got out literally right before Bitcoin crashed, like right after Bitcoin went to 19K. I woke up one morning, I was at my parents' house, I saw that. I sold all my Bitcoin, and it was crashing within the next few days. So that was sort of a luck type thing. But no, I don't typically trade it. I don't know of any of my clients that trade crypto, especially on margin, but I do have plenty of people, that I've taught to trade that hold crypto within their e-wallets per se. So yeah, that's my view on crypto.
In the beginning, what do you think made you different from everyone else out there? I mean, what traits did you have and what actions did you take that maybe other people out there aren't taking?
So I think it came down to one thing, and that one thing revolved around what my goal was. And my goal was to get freedom financially, freedom with my time. And so I think the one thing that separated me was I didn't have a plan B. My plan A was to try, my plan B was to try plan A again if it didn't work out. And so I pretty much told myself, I'm going to make this work out, and I'm going to just take as long as it takes. If it takes 1 year, cool. If it takes 10 years, cool. Because I knew that if I did make it work out, and I knew other, professional traders and a lot of my friends who were already successful trading Forex, I knew they had made it work out. So I thought, chances are, they're no smarter than me. If they can do it, chances are I can too. So I just really stuck with it. So it was just that persistence, man, because my goals were really that strong enough. So yeah, I really, really, really just wanted freedom, man. So that's what sets me apart, I think.
And where did you go for your education? I mean, obviously you talked about the same stuff that Derek did and Avdo did. I mean, what else did you do? I mean, how did you educate yourself to get to the point where you are now? Because obviously, you can sit there and look at the charts the whole time. Was that what it was, or did you actually seek out other information?
Yeah, I mean, various websites, man. A lot of it from YouTube. There's a lot of good content on YouTube. But either way, man, there's a bunch of strategies that work, or quote-unquote strategies. Of course, I don't think there's any holy grail because the markets are ever changing and everyone's psychology is different. And even if you take one system that may work for one person, it will not always work for someone else because people's minds are different. People's psychology is different. People's perceptions are different. And so for me, I don't know. I just sort of stuck with it myself and kind of like from personal experience, I'd say that's where I learned the most. I learned the most about myself through personal experience, through taking losses, through seeing patterns over and over again. And that combined with a few external sources like learning from YouTube, learning a little bit from Derek, a little bit from Avdo, stuff like that will help me along the way as well.
And are you one of these guys that journals your trades?
I do, but probably not in the typical way. Whenever I take trades, especially if they're swing trades, I typically just put them in the notes section of my phone, and I'll write. It's just a very brief thing, and I just started journaling because I found that a lot of other people who are profitable traders journal and they write down the reasons why they take trades. And so for me, it's a very quick, very brief, informal thing. I'll type in the trade that I took in the notes section of my phone. I'll put why I took it, and then I'll put whether or not it worked out or not, whether it hit stop loss, whether I closed early, and then I'll put my reason why. And I think that's very important because that lets you learn more about yourself so that you can apply those to future situations and future trades.
Cool. And so if you're a retail trader working a day job, as you probably were at some point, what steps would you take to start earning income trading?
First thing, I would definitely invest in the proper education. You will pay for your education one way or the other, whether you pay for a course, whether you pay for a website, or someone to teach you in person, or whether you just fund your money into the market and you trade your money. You will pay for your trading and losses as well. And even if you don't, even if you just do a demo account, man, you're going to be spending quite a while. Just that investment of time alone, oh my God, like you're going to be spending hours and hours, maybe a year or two, before you're able to become break even or anything like that. So I think it's just best to, find a good source to learn from, invest in the proper education, just invest in the time, go through the motions. And even if you have just an hour a day, even people who work overtime, like I think if you're in a position where you want to learn something like trading or anything outside of your current income to expand your income, you got to be able to invest time. And if you can invest at least 1 to 2 hours a day to learn, I would say do that. And so the steps I would go is invest in the proper education, and then slowly build up the proper education so that you know how to trade. Test that on a demo account for 2 to 6 months, I'd say. And then after that, as long as you've been profitable consistently week to week, you're going to have down weeks here and there, but as long as you've been consistently profitable for, I'd say, 2 to 6 months, then I would say fund a reasonably sized live account and then practice the same exact trades that you did on the demo account with the same exact lot sizes, same exact account size, all of that stuff to keep everything realistic. And I think those are sort of the steps I'd take to get there if I was a retail trader working a day job.
So what about fundamental analysis? I mean, do you do any of that? Do you take the news into consideration?
Typically not, man. No, I mean, on the higher time frames, especially now, sometimes the fundamental analysis like the news will just, it's sort of an excuse to make the markets do what they're supposed to do anyway. So if technical analysis points, to 3 different things saying that we think that the US dollar versus the Japanese yen will drop, typically from my experience, it doesn't always happen, but typically the fundamental news event that ends up spiking the market will typically spike it downwards and make that drop happen. So that's how I sort of look at fundamentals.
And what about technicals and a price chart? I mean, you've talked about some of the things you use in your trading. I mean, what 3 things would you recommend somebody go off and educate themselves on?
Definitely learn how to draw levels. I would definitely learn how to draw levels on your chart, which is typically just like support and resistance, but anywhere where you see a lot of price reaction, because those levels are very, very important. And once price gets there, you see how it reacts to the level. So I'd say learn how to draw levels. Number 2, I would study any type of variation of the Elliott wave theory or the market maker method, which is essentially the same thing. Just like the market will be in a range or consolidated, it'll break out of that area, typically in 3 pushes before it gets exhausted, and then price ends up making a reversal. So I would learn some form of the Elliott wave theory or the market maker method, or just the 3 pushes. I would learn some variation of that. And the third thing I'd say is price action. You have to be able to decipher price action as a trader, because even if you have a perfect pattern and the chart paints the perfect candlestick pattern that you think will end up making a reversal or a good trade, if you're not taking everything into context and you're not looking at the price action, if price action is suggesting otherwise, then you'll typically find yourself staying out of trades based on price action being bullish. If you think that the technical pattern you saw indicates a bearish reversal, you'll find yourself staying out of those trades, and that prevents you from getting caught in drawdowns and losing trades as well. So I'd say those 3 things.
Brilliant. All right, let's head into the quickfire round. So it's about 9 questions I'm going to go through. Some of them you can spend a little bit longer on because they do take a little bit more time to answer. But the first one should be pretty short and sweet. How long did that take you to go from trading newbie to consistently profitable?
Yeah, so roughly a year, maybe a little over a year to be about break even, where I started making a little bit of money, losing a little bit of money, so break even. And then a year and a half, I think maybe a little bit before a year and a half, I was solidly making enough that it was like as much as my full-time job. And after I'd done that for 2 months, I quit my job and I just relied on trading. So I'd say a year and a half from the moment I started Forex to the moment I was actually making enough to pay my expenses month to month, and it replaced my job.
What's your mental approach to trading, and do you have any special techniques you can share with us?
Yeah, so my mental approach to trading is number 1, always, 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 is just staying peaceful. As long as you're peaceful and you're relaxed when you're trading, trading will not seem stressful, and it can be a very stressful thing if you don't know how to control your emotions. And so special techniques, you do some form of meditation, even if it's just like me. Like if you're just going and taking a walk in the morning, if you have some sort of a routine where you get up and you get a cup of coffee, or you get up and you walk your dog or something like that, just have sort of a routine and something that always sets your mind in the right spot before you come to look at the charts. So anything that makes you peaceful and relaxed before looking at charts, that's what I'd suggest.
What's your favorite entry setup?
Yeah, man, my favorite entry setup, I'll lay it all out right here. So I wait for the market to break out of a range in 5 Elliott waves, or just to break out of a range in 3 little pulses. It'll break out in 1 pulse, then chop, and then a second pulse, and then chop, and then a third pulse. And then at that third pulse, I wait for a divergence to happen. And this is typically on the H1, H4, even daily in some cases. And my favorite entry setup is right there on that final quick, crazy, fast divergent pulse. at the end of that third level, because typically that's a stop hunt. And if it's very fast and swift, I love entering right there. And then if price quickly comes right back down into that range and starts going the other way, then I know I pinpointed the exact reversal. So I love entering right on those fast, quick divergences, because typically those are stop hunts where a lot of retail traders get stopped out at. So that's my favorite entry setup.
What strategies do you use to exit or manage active trades?
Yes, I think this is a little bit different for everyone. For me, since I watch so much price action, and since I'd say I understand price action pretty well, what I do is, let's say I have entered a trade, and I think for some reason, whatever, gold is going to spike upwards, and I think gold is going to start going up. So once price gets to that level, if price gets there and I see a really strong reaction, like a really strong spike at that level that I think it's going to reverse at, I wait for gold to begin going into an uptrend, and then I wait for it to pull back and crash like crazy to maybe 61.8% of the previous impulse, or maybe even all the way back to the initial low that it set right there at that area before it reacted very strongly. And I enter right there. And what I'll do is I allow myself a maximum of 3 entries per trade. And what I'll do is for my first entry, I always use just 1/3 of my normal position size. And typically that's like 0.03 for every $1,000. So for instance, like one account I'm trading right now, a personal account, it's to $22,000 right now in equity. And so for that, I'm just using a 0.6 lot size for each initial entry. And so that is how I sort of manage my entries. And then if I get drawdown, as long as it's fast drawdown, if it's fast, spiky drawdown, maybe divergent on lower time frames, then I'll re-enter my full position at better prices. And typically right there, if I'm right, I know price should typically go right into profit. If it slowly starts consolidating against my entry, like very, very, very slowly, and starts slowly moving away, that tells me that there's not many buyers at that level, and then I must have been wrong about my analysis or something like that, or whatever. Sometimes stuff just doesn't work out. So I'll typically cut trades if they slowly consolidate away from my entry, and I can get those at small losses typically, instead of waiting for a stop loss to hit like 100 pips away. If you can get out with a 30 pip loss based on price action because you anticipate a further spike downwards, then you can get out with those smaller losses just because you know what price action patterns are. So that's how I manage trades.
What's your recommended trading book?
So I don't really have one. I've never read a trading book before, but if I had to recommend one, it would be Naked Forex by Walter Peters. Because I watched a couple of his YouTube videos and I've listened to a few podcasts with him, and I just think it'd be a pretty good book to read. So Naked Forex.
If there was one thing you'd recommend any retail trader spend the next month mastering, what would it be, why, and how could they go about mastering it?
Man, that's tough because there's just so much when it comes to Forex. But I would say don't focus too much on a specific strategy, and don't focus too much specifically on buying or selling, or the question of what should I do whenever you're looking at a chart. But I would say if you just, like, let's say even if you've been trading for a year or two and you're not profitable yet and you're still struggling, maybe you're a break-even trader, I would say spend a month not placing any entries. There's three forms of trading that you can be in. The first one is you can be in a trade, and the other one you can be not in a trade. And then the other one is that you can just simply be not even like looking at the charts or anything like that. And I think that the best way to be is flat. I think that if you're flat and you're just not trading and you're not in any trades and you just watch price, you're not biased, so you look at price for what it is. So I'd say if you're going to spend a month, don't worry about placing any trades. Mark up levels on your chart, follow your trading strategy or whatever it is. But whenever you see price make a pattern that you would normally trade, don't trade it. Just watch it and see what happens, and then spend a month doing that. So that way you get familiar with the patterns, and you'll also begin to see things that you didn't see before because you're now no longer biased in your thought process. So if you were seeing a setup that indicated that you should click sell before, every time before in the past you would click sell, you'd be predisposed to thinking that everything you see is a bearish confirmation because you're only looking through those lenses of bearish. You just want it to go down. You want price to drop. You want to make money. You want to hit your profit target. But if you don't do that and you're not in a trade, you end up seeing different things like, oh, well, I saw some bullish wicks here, or price looks like it's respecting this level and it looks like it may spike up to the upside. And then you can use that in the coming months after that month that you spent learning that to sort of refine your trading in a way that can be profitable and beneficial to you. So yeah, I'd say that. I'd say don't place any trades for a month. Watch price action, follow your system, so that way it sort of expands your mindset, expands your knowledge of price action and what it's doing.
Fantastic advice, because I think the other thing that you didn't mention that it would do is build that patience muscle as well. So being able to sit there and not take a trade, which I think a lot of people, who overtrade or revenge trade, this is something that they suffer from. What's your preferred broker and trading platform?
I have a couple different brokers, and for some clients that I trade, they're personal friends that I trade for, but I trade for 4 people, and they all use their own brokers, and I just trade from their account. My brokers that I like, man, I like Trader's Way, I like FX Choice, and I'm still trying to figure out whether or not I really like LQDFX. But I'd say, man, if you're in the United States or if you're in an area that you can use Trader's Way, for me, Trader's Way has always been really cool. I've had them, I think, so yeah, I had a Trader's Way account when I started trading, and I sort of shopped around with different brokers. But Trader's Way is really good. I recommend them. I fund with Bitcoin, and then I can withdraw with Bitcoin. It's really easy for me. I've never really had a problem with them. And my trading platform is MetaTrader 4 is what I execute trades on. And I execute all my trades from my phone, just the mobile MetaTrader 4 app. You can also do this on the PC version as well. And I use TradingView to mark up charts. So TradingView to mark up charts, do all my analysis, and I will execute trades on my phone.
It's quite funny. My own mentor, who's based in the States as well, uses those exact 3 same brokers that you listed off. So they're obviously good brokers for guys that are doing well, and they're not scammy brokers, which is great to sort of I suppose hear. Now, what's the worst trade you've ever had?
Yeah, so this was actually a few months ago, and this was just a big stupid. So here's honestly what happened. I was hanging out at my place with a few friends, and I was waiting for a setup to happen. It was on USDJPY, and I entered a buy, and I did 5 lots, which my maximum position size for that trade should have only been 2, and it should have been scaled in on entries. But so I put 5 lots in on a buy. I was also having a few drinks, so I guess I was a little bit, like I was just having fun. I wasn't really paying much attention. But I saw a price come to there, and I had a student in my group chat call it out and say, "Hey Nick, UJ just formed our setup. USDJPY formed our setup. Look at it." And so I took a look. I was like, "Yep, that looks like it." So I entered a buy, but here's the thing: I didn't put a take profit or a stop loss. And so I ended up going to sleep, and I woke up the next morning and found my account in drawdown of negative 3,600. And so I watched it for a few minutes, tried to decide what I was going to do, decided I still should not be in the trade. I should have never been in this trade for that long. It should have been cut a long time back, and I should have never used that lot size. But I already knew this, so I didn't learn any new lessons. It was just a stupid mistake. So I ended up cutting that trade with just about $3,400 of loss. That's the biggest loss I've had so far.
And I'd say that's lucky with your 5-lot trade. If you could leave our listeners with one piece of advice, what would it be?
If I could leave you with one piece of advice, all you guys, whether you're learning Forex, for the first time now, or you're just getting into it, or whether you've been trading for years, I'd say make sure that no matter what, when you're trading, make sure you're always in the same mindset. And that mindset should be something evolved around being peaceful and relaxed. So as long as you're in that mindset, I think you can make plenty of trading systems work. But just make sure that whenever you're using your trading system, whenever you look at charts, you're peaceful and your emotions are not influencing any of your decisions.
Brilliant. Last question of the show. We'd like you to give us the bones of a full trading strategy. So the entry setup, stop loss, take profit targets, market time frame, something our listeners can try it at home. What have you got for us there, Nick?
Yeah, man. So let's get right into it. So the bones of a full trading strategy. What I want you guys to do is, if you guys go home and you're looking at charts or whatever, open up a JPY pair just because they're really volatile. Go to like a minute 15 chart, and you can see this pattern across all time frames. But here's what you're going to do essentially. You're going to wait for the market to be in a consolidation. Okay, so after the market is in that consolidation, wait for the market to break out of that consolidation. For example, let's say that the market breaks out of the consolidation and goes upwards. So wait for it to break out, make its breakout and come upwards, and then wait for it to come back and test the top of that range or that consolidation. And after it tests it, wait for it to spike up even more a second time. So essentially we've had a consolidation, a breakout, and a retest, and then the market pushes up more. So the market will push out of that consolidation one time, wait for it to chop up, wait for the market to push up a second time, and then after that, wait for the market to push up a third time before you start seeing wicks. And if you see bearish wicks after that third little push, or if you start to see divergence or bearish wicks or price getting choppy and quickly rejecting that level, as long as it's at a significant level, typically after the market breaks out in a pattern like that with 3 little pulses upwards, you typically should see some type of reversal. So for that, you can enter a sell right there as long as you start seeing that bullish or that bearish confirmation. And when the market comes down, take it to the profit target of about 50% of the previous up move. So if you just put the Fibonacci from the lowest point of that consolidation all the way to the tip-top area where the market started reversing at, and just hold about halfway down of the previous upwards trend. And then, just the stop will go at like roughly a 1-to-1. But typically, if you've nailed it and you've done your analysis right, it's got a consolidation, breakout, and 3 pulses, and then divergence at the top of that, and wicks and stuff. Typically, you shouldn't see any drawdown at all. I mean, maybe like a spike against you real quick, but it shouldn't be enough to stop you out. If you're going for a target of 50 pips per se on the minute 15 on a JPY pair, set your stop loss at 50 pips. Give it some room to breathe, and those work out so well. Again, I teach this for free on my website as well. So that's sort of the bones of a full trading strategy.
Brilliant. That's absolutely superb. We haven't heard that one before, and I did see an image that looked very similar to that on your Facebook page. So, guys, if you want to check that out, actually, what is the best way for our guys to get hold of you?
You guys can contact me any way at all. I have a contact form on my website. It just goes to my email. But, you guys can message me on Instagram, message me on Facebook. Messenger works very, very well. My name's pretty simple on there. It's Nick Shawn. First name Nick, N-I-C-K. Last name Shawn, S-H-A-W-N. But, you guys already have my name from this interview. But, yeah, just add me on Facebook. I'm a real people person. I like talking to people. I love meeting new people. And, if you guys have any questions or you just want to get a hold of me, just shoot me a message on Facebook. That works great.
A big thank you to Nick for sharing with us today. Everything we discussed here, along with all the links, are in the show notes. To find them, simply search for Nick in the search box on 52traders.com. Until next time, I wish all my listeners trading happiness and success. 52 Traders? Okay, if you're thinking, what's 52 Traders? Basically, this was my old podcast. This episode was actually recorded at the very, very end before I knew about Trading Nut and what Trading Nut was going to be called. So that's why I said check it out on 52traders.com. In actual fact, it's all about Trading Nut now. So guys, check it out on tradingnut.com for the show notes. There's quotes, there's videos. Jump over there, check it out right now. And whilst you're there, think about the gold membership. It's really good value, and you're going to get massive amount of usage out of what is being produced in these trading robots every single month. All right, folks. So I'll see you over there at tradingnut.com.